And welcome back to GBS lecture series. I'm Mohammed Ashik Khan, the managing partner and the senior lecturer on financial reporting and any other related subjects. Today I'm planning to pick up an accounting standard recently released, IFRS 16. The IFRS 16 actually a standard that is uh, succeeding standard which replaced we discussed IFRS 16 that is superseded by IAS 17. Actually, today I'm planning to discuss the very brief summaries of the standards, and I will have a detailed discussion on the subsequent videos because just to give a grip as to how this can be useful for people who appear exams, specifically ACCA or any CA exams, or even people who practice like auditors or accountants or people who work in the leasing industry. This will be very useful. So what is the key thing or the key difference between IAS 17 and IFRS 16? When someone has already studied, people who have already studied IAS 17, they probably studied that a lease can be divided as to finance lease and operating lease. Basically, by looking at this, we understand that the lease is categorized as to two sections, a finance lease and an operating lease. Whereas under IFRS 16, they say that no more categorization as to finance lease or operating lease. Basically, they grouped all the leases as one single category, and they still kept a separate categorization that they don't call it or classify as lease, rather they just consider something like expenses. How that categorization comes in? There are only two types of lease, only two types of categorization. It is one is call it as lease itself. Other one is either short term or small value is small in value. You categorize like this. So if any of the arrangement falls into a short-term lease, or that lease amount is very small, it is insignificant, is smaller in nature, suppose less than $1,000 or something like that based on some threshold, and that you categorize into this group, and all such leases you write off to P&L. You write off to P&L as expense. Whereas once you decide these are lease, then it is same like under IAS 17, we follow the finance lease. What are the accounting entries that you conduct here? So here what we do is that we recognize an asset. We recognize an asset and we recognize a liability. What is the asset we recognize? The name that we give here is that right of use asset. Basically, because of this lease arrangement, the lessor is giving the lessee a right of using a portion or the entire asset, or a given portion or selected portion of the asset, and that is you recognize in the books of the lessee as an asset. because you are given such a permission to have this right, then accordingly you need to recognize the liability. So that is lease liability. Now the question is, what are the minimum criteria to decide whether this arrangement falls into a lease? It is an arrangement between two parties, I would say two or more parties, that where the one party is known as lessee, the other party is known as the lessor. The lessor, you have a lessor here and you have a lessee here, and then sometime probably you may also have a dealer. If I pick an example of the lessee is in need of a car, where lessee is not having enough cash, so the car is sold by the dealer. The car is here sitting here. According to my drawing, this is the car, and here the amount of cash is with the lessee, and this person is in need of the car and he doesn't have the cash. So what he does, he approaches the lessor saying that, Mr. Lessor, could you please arrange me a car? In turn, I will pay you on a monthly installment basis. So the lessor approaches the dealer, instructs him through an official formal legal document saying that please release the car to the lessee. So the lessee will receive the car. Here, what are the criteria? The one criteria is that the risk and rewards associated to the item in consideration should be passed to lessee. Number 2, the fair value, what I mean is that the present value of minimum lease payment should be substantially closer to the fair value of the leased item. And at the end of lease term, if the lessee is acquiring the ownership, you have to check that, acquiring the ownership at a minimal value or at a nominal value, So based on these criteria, we would decide that this is the amount of asset that places us recognize and satisfies the condition to fall into a lease, and accordingly we follow the accounting treatment stipulated by IFRS 16. And this discussion I will continue to further to talk about how the calculation of interest, how the calculation of depreciation, how we present in our financial statement in my next videos. Stay tuned with GBS YouTube channel. For receive more videos and continuous technical materials, kindly like my video, subscribe it, press the bell button, and make this useful to everyone who is in need of financial reporting knowledge. Thank you so much. See you soon in a different video lecture.